Paramount Global is one Warren Buffett stock that is down 78% that I think you might regret not buying on this dip here. I'm going to explain why I think that's the case in this video. So stay tuned and let's begin. So Paramount Global, one of the things I like about this company is that it's been able to increase revenue over the last decade from a little under $5 billion all the way up to $8.131 billion. And of course, two big stories are happening with companies like Paramount, the studios that produce content. One is that millions of people are canceling their cable subscription in favor of streaming services instead. And the second thing that's happening among these kinds of companies is that they are launching and investing in their streaming services because of the first fact I mentioned. People prefer streaming over traditional cable connections, which makes sense, right? If you think about a cable connection, you're paying for a service that you can only use when you're at home or maybe when you're at your office, but you can't use it when you're away from your house or when you're away from your cable connection. Now compare that to if you pay for the streaming service for Paramount. Now you can access your service anywhere you go as long as you have an internet connection, which most people have with their smartphones. You can have the download the app and watch your content and your favorite show wherever you go. So it's a lot more convenient and the price is a lot more favorable because you get to pick and choose which services you want. You don't have to pay for a whole bundle and all of that. So smartly, the studios finally said, all right, it's time and we need to invest in our streaming services. That's what Paramount Global is doing, and they've had really good success. They've got some really big hit shows, and Yellowstone is a Paramount show. It's one of the hottest shows on television. It's led to spin-offs that's also really hot. It's getting millions of viewers. And so they're doing a really good job with this switch over to the streaming services. Now, of course, that hasn't been um, without friction, right? So let me show you this chart here. This is Paramount Global's operating profit margin over the trailing 12 months. And you could see it was trending downward as millions of people were canceling their cable subscriptions and Paramount was losing subscribers. And then it took an even bigger dip downward as Paramount invested in rolling out its streaming service, right? So when they rolled out their streaming service, they had to invest millions and millions of dollars, and then they had to invest more in content. And of course, it also cannibalized some of its subscription business in the cable side. So it's been a massive investment up front that's going to pay off longer term. But right now, it's hitting the company's profit margin, as you can see here. Operating profit margin has fallen from 20% all the way down to 9.36%. However, all of those introductory offers, those investments up front, are now abating, right? If you look across the board, across the streaming segment, the competitors are raising prices, right? Netflix, Disney Plus, Paramount, HBO Max, all of these prime streaming services raised prices. They've also reduced content spending. So there's an increased focus on profitability instead of just subscriber growth. And that's really good news for Paramount Global. And for that matter, everyone in the streaming industry, because that means less competitive pressure. Bad news for customers, right? Because prices are going up, content is going down, but it's good news for investors because those same two things I mentioned earlier, prices going up, content spending going down, is good news for profitability, which is good news for investors. And so that's one of the main reasons why I like this stock right now, and I think you might regret not buying it on this dip here. It's down 78% off its high, and understandably so, right? The stock should be down somewhat off its high because it's going from this legacy business model that was proven to be very lucrative, right? Operating margins above 20% with billions of dollars in revenue. And it's going to this new business model that hasn't yet been proven, hasn't been proven how profitable it's going to be. Although I think that investors are perhaps overreacting from this change. I think one of the big thing that's going to happen from switching from the traditional cable model to the streaming model is that people are going to watch more content, right? You have more access to your content because you have it on your laptop, your smartphone, your tablet. You could take it with you anywhere you go. So that's going to allow you to watch your content more often. So demand is going to increase. And ultimately, when demand increases, that's good news for the company. Now, there may be some headwinds in terms of monetizing that increase in demand, right? Finding the optimized way to monetize it. So that's why the stock price is down, understandably. But I think long term that it's going to be better for Paramount and better for investors. So I think that's one of the reasons I think you're going to regret not buying this stock on the dip here. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. And the final reason I'm going to mention why you might regret not buying the stock on the dip is because of the favorable valuation now. That huge stock price decline has Paramount Global trading at a forward price to earnings ratio of 13.58. That's near the cheapest it has been going back 15 months. And it's also relatively, it's not an expensive valuation. The average stock in the S&P 500 trades at a forward PE around 17, 18. And so to get Paramount at less than the average price of the S&P 500 stock, it's a relatively good price. So for all those reasons, I think you might regret not buying this Warren Buffett stock on the dip here. And that's all I've got for this video. So thank you so much for watching. I've selected this video here that's popping up on your screen. I think you'll enjoy it, so please click on that and I'll see you over there.